Alright guys, in today's video we're going to be talking about the one trading model that you need to quit your job in 90 days, okay? So pay attention to this video. It's going to be over the SBS model, which I'm sure many of you haven't heard of, okay? And if you guys want to get into any prop firms, I'm going to have some links down below for some discount codes and go buy yourself some accounts, okay? So let's jump right into it, okay? What is the SBS model? SBS model is by a guy named Stoic, okay, on YouTube, okay? And I have some notes here. We had a lot of people interested in the SBS model from the last video, okay? So there's 6 steps with the SBS model, and we're gonna list them again, okay? So number 1, we need a breakout, okay? We need a breakout. Simple, right? Number 2, there's 6 steps total. 2, we need a tap, okay? A first tap into the breakout, okay? And we'll go over that in a minute, okay? Number 3, you need to have, there's an option for a quick scalp, okay? You can skip that, you don't have to do it. Number 4, you return back to number 2 and liquidate number 2, okay? So you liquidate that first tap. 5, double bottom reversal, okay? And then 6 is you target swing low / high, okay? So this is our entry model, okay? And this is the regular SBS model. Okay, now there's a model, the golden SPS, which is what we're going to be talking about in this video, which just is this, but involves a Fibonacci tool, okay? And again, this is all you need. It's all you needed. Market structure, Fibonacci, that's it, okay? We're going to be showing you right on market open today, okay? And just an example of today. So what is a breakout, okay? First of all, you want to try and find your trend, right? If we're in a bearish rally gap on a higher time frame, maybe you're looking for a lower trend lower, right? So on the 15-second, this works on any time frame. What do we have? We have a breakout right here. This is where we're looking. So market opens right around here, okay? And we break down. Also, this is probably a better swing point. So we move down, move back up, swing point here, we break out. Okay, this candle is where we break out, okay? So we're gonna label this our number 1, okay? Right here, our number 1. Where's our number 2? A first tap back into this, where this orange line is. So that's this immediate next candle, okay? But I like to kind of mark them on the swing points. So right here, our first tap, okay? What do we need next? Number 3 is going to be a quick scalp down to take out number 1, okay? Take out number 1, okay? You want to liquidate number 1. So move back lower, we take out 1, we take out that breakout area right here, okay? Right here, number 3, okay? And if you want to point them at swing points, you can do other spots as well. So a breakout here, where's our first swing point, right? Our first swing point is here. So we break out down to here, then we pull back into the zone, okay? That make more sense? So we have our swing point here, we break down, move back up, so we have a swing here. That's 1. Then 2 is our first swing when we tap back into the zone. Okay, right there or right here. Okay, move back lower, we take out number 1. Okay, so we take out 1 here. That's gonna be our number 3. Okay, where's our 4? This is when we draw out our Fibonacci tool. Okay, number 4 is when we draw out the Fibonacci tool. So basically after we see 3, we draw it from this swing high to this swing low. Okay. Now where's our 4? Where's our entry? Okay, number 4 is going to be right when we touch this 0.618 on the Fibonacci tool, okay? This is my Fibonacci settings here. Feel free to copy them. You need the 0.236 and the 0.618. You don't need the 0.65 you don't want, okay? So 0.618 is where we enter, okay? So we would enter right here, okay? Stop loss at the 1 and target at the 0.236. Okay, now this would be a 1-to-1 ratio, which is fine if you know how to manage risk and you size properly, correct? Okay, so this would be our number 4 though, right up here. Okay, and then 5, technically 4 would be right when we touch that. 5, our double bottom / double top, so double top here, and then reversal down to 3. Okay, so you can leave runners to 3. I do recommend taking some position off at the 0.236. Okay, so that's an example there. Does that make sense? Again, let's go over that one more time. We have a swing point here. We break down. Okay, so we're looking for a move lower. Okay, break down. Okay, we have a swing point. That's 1. We move back up. Swing point here and back into this breakout zone. Right, anywhere above here. That's 2. We move back lower to take out number 1. That's 3. And then 4 has to take out number 2, right? Which it does, and it lines up with that 0.618. We take a short and we trade lower. Okay, that's on a 15-second chart. Okay, works out great. And again, I do recommend taking some position off at the 0.236. Okay, and again, this is the only trading model you need. Okay, I'm actually gonna pull up a back test I did of this so I can prove it to you guys. Okay, so if you go on to TradeZilla or FX Replay, they have back testing. Okay, so these are my results from a back test I've done. Okay, here we go. So trading, risking $200 per trade, going for a 1-to-1 ratio. Okay, this was my October. Okay, actually we'll start with September. This is my September when I was getting adjusted to some things, right? Okay, this is and I was getting used to the TradeZilla backtesting platform. Still a profitable month. Okay, October is where it really shines. Okay, found a great click to it. Two trades a day. Okay, and works out great. And this is the November so far that I was testing. So 1 to 2 trades a day is all you need. Okay, I have about a roughly 68-70% win rate with it. And again, this total profit in 3 months, 2.5 months, it's from risking 200 per trade with a 1-to-1. Okay, so each winner is 200. So 61 winners, 28 losers. Okay, you don't need to go for home runs. Okay, so breakout, first tap, liquidate 1, liquidate 2. Okay, remember that. Breakout, first tap, liquidate 1, liquidate 2. Okay, now let's look at another example here. Okay, so we'll delete this. And if you guys want to try out any of these, I would recommend doing it on a prop firm. So I'll leave some discounts down below. Okay, okay, let's look for another example. Okay, so here we move lower. What do we have? What do we have here? A breakout and a first tap, right? So that could be the start of something, right? We move back up, we liquidate the 1 here, but we don't liquidate 2. So there would be nothing there, okay? If we adjusted it to here, what do we have? We have a 1 here, then a 2. Okay, but we don't break above 1, so this would be a 1, then a 2. So nothing really there either, okay? Let's see. Might have one here. 15-second chart. What do we have? Let's mark it out. Okay. So we have a breakout. 1. Okay. Tap back into the zone. Where is that? That's on this candle right here. That's 2. Move back higher to take out number 1. That ends up being all the way up here. Right? Okay. You get why I'm marking it up here? It's because we need now to take out number 2 for it to be a valid trade. Where do we take out 2? Over here. So this swing high would be our 3. Okay. Then what happens? Okay, let's mark out a fib tool from this low to this high. Let's see. Yep. So basically touch that, right? We got a tick away. Okay. Depends where you draw your fib tool, right? Some people may want to draw it from here, right? May want to draw it from right here. Some people may want to draw it from right here. Either way, it's basically bouncing right there, okay? If you draw it from here, I mean, I would probably market enter if I got that close. It's only 1-2 ticks away, really, right? So you enter on the 0.618. This would be our 4, right? Because we liquidate 2. We liquidate 2 and pull into the 0.618, okay? We take a long entry, put our stop down here, target up here, and again, you can target the 3 as well, okay? So you can leave runners for the 3. Okay, and there you go. That's it. Again, let's go over it one more time. Might be able to see it on a 1-minute chart. Yes, you can. That's a lot easier actually. So let's show you that. Okay. Here, breakout, that's 1. First tap, that's 2. Swing high 3. Swing point 4. draw that. Okay. Can even draw it. We'll just draw it. Even here is fine. Doesn't really matter too much. I mean, it does, but this example, it doesn't matter too much. Okay, so breakout, first tap, liquidate 1, liquidate 2. Just remember that pattern. Breakout, first tap, liquidate 1, liquidate 2. Okay, 1, 2, 3, 4. Okay, and we take a long entry and target the 0.236 and leave a runner. Okay, very, very simple. Yeah, it works great, right? This is all today. Okay, let's see if we can find another trade. Okay, this is all you need. Promise you guys, this is all you need. Let's see here. This looks like it could be one. So we have a breakout here, right here, right? We break out, we pull back in. That's 2. Okay, come back down, sweep the 1 area. That's here. 1, 2, 3. With our 4, we're going to draw our fib from this high to this low. Here. Okay. I usually like to draw the swing point nearest to where the breakout is, right? So like this swing point here, we broke out, right? That make any sense? So, okay. So we have our breakout, first tap, take out 1, take out 2. We enter on the 0.618. Took a little drawdown on this one. Actually, no, because we tapped the 0.236 right away. So do you see why we scale at the 0.236? Because we bounced it there right away. Okay. We actually might have been a little off, but no, it looks like we tapped it. So scale the 0.236, and again, you can leave runners down to the 0 or the 3. Okay, that makes sense. We have again a breakout, first tap, liquidate 1, liquidate 2. This would be your 4. Let's pull our rules back over. Breakout, first tap. You can get a quick scalp down if you want, but I would just stick to this. So breakout, first tap, liquidate 1. Return to liquidate 2. That's when you draw your fib, enter on the 0.618. We have our double bottom, double top reversal, and then boom, low. Okay. Those are all the examples I'm going to show you in this video because I don't want to get too long. Okay. But very simple. Do some practice on it. I promise you guys. This market structure, Fibonacci's, and the SPS model is all you need. Okay. Yeah. Practice this. Shout out to Stoic. Thanks for watching.